All right. Hello, everybody. Okay, so today we discuss wrapped cryptocurrencies and more specifically, wrapped Bitcoin on stacks. Now, the best way to describe wrapped cryptocurrency is to share really quickly why we do it. So traditionally, blockchains have a difficult time communicating with one another. So wrapped cryptocurrencies has become somewhat of an interoperability hack. What does that mean exactly? Well, wrapped Bitcoin are tokens that are a one-to-one representations of Bitcoin. So the wrapped Bitcoin tracks the value of Bitcoin and can be redeemed for Bitcoin. My feeling is that xBTC is going to play a major role in bringing continued innovation that so many of us want to see on Bitcoin. So help me welcome to the stage our host, Muneeb, co-founder of Stacks, Patrick Stanley, CEO of Freehold, and the rest of our guests.
Hey Mason, I love your profile picture. You wanna show some NFTs to people? Like, which one is this?
Yeah, no, thanks so much. Someone commented that my old profile picture was too serious, and so I made it a penguin, and here we are. This is a pudgy penguin, and I forget which one it was, but yeah, this is one of the pudgy penguins I got.
Awesome. You wanna just do a quick intro? I feel like a bunch of people already know you, but do you want to do a quick intro and then people can do the same?
Absolutely. My name is Mason. I'm the CEO of TokenSoft, and we're here to talk about an asset we're launching under our Wrap.com product. So Wrap.com is where we bring Bitcoin, Ethereum to other chains, and so xBTC is one of those assets that we'll be launching that we're super excited about. And as Frankie mentioned, it's a one-to-one equivalent of Bitcoin. It's 100% backed by Bitcoin, and it's going to be issued and redeemed natively on the Stacks chain. And yeah, we're really excited to talk more about that and help get that to market.
Yeah, on my end, Philip here, one of the contributors of the Arkadiko protocol. We're one of the first DeFi protocols launching on Stacks pretty soon. In fact, probably before November, finishing up our security audits. And so our first product that we'll be launching is a stablecoin, a crypto collateralized stablecoin, meaning you can use any type of, whether it's a Stacks token or what we call a Sept token, which is the token standard, fungible token standard on Stacks. You can use technically any of those tokens as collateral to mint our stablecoin called USDA. And well, that might have some ties into xBTC, which is also a Sept token, hence why we're talking about that today.
Awesome. Thanks, Philip. So I feel like maybe I can just talk about a little bit background context here, and then we can just dive into a discussion and see where it goes, and invite people up as well. So I feel like one of the more interesting things that I've been obviously interested in and trying to enable is that Bitcoin is sovereign money. Just today, we saw the launch of the Twitter tips payment with Strike, which runs on Lightning, which was just amazing to see. Right, like I don't know if people have watched that, but that was so awesome to see real use cases of Lightning, which is like a layer around Bitcoin, much like Stacks. But Stacks is more like a smart contract layer, like the payments layer. And over there, what's interesting to me about today's launch as well is it's an application that's really using the core decentralized money layer of Bitcoin in a way that it truly impacts day-to-day lives of people, right? And it's been a long time, right? So people have been criticizing Bitcoin for various reasons, yada yada. But I feel like then you suddenly see a big thing like this, or you suddenly see an entire country like El Salvador just accept Bitcoin and so on, right? So similarly, I think there's a big, almost like a unexplored territory around Bitcoin, which is making BTC, turning it into a productive asset. Right? Like people mostly hold Bitcoin or they trade it on centralized exchanges, but they don't really use Bitcoin as a productive asset. They don't deploy it that much. They don't really do much with it. But like they're mostly and a narrative has emerged around Bitcoin is for holding and it's like gold and so on. And I feel like yes, like the narrative is simple and it helps in certain ways, but Bitcoin is like much more than that. Right? So when I look at these different like L1 platforms that are enabling smart contracts, and they're actually enabling so many interesting use cases. Like you can have you could put up collateral in crypto and mint a stable coin, like pretty much like what Arkadiko and Philip are doing, or you can build like liquidity protocols. You can enable people to borrow, lend, like all these interesting things built in a decentralized way. But it's not really happening that much around the most decentralized best form of money, which is Bitcoin, right? So that's kind of like the landscape where I go like, well, the smart contracts are super interesting, but I wish that this was happening around the Bitcoin economy, and we are able to kind of like grow the Bitcoin economy itself. And that's kind of like the challenge that I've been personally trying to tackle with the Stacks project and so on, because I really think that just like today when you saw that hey, you could just make like a Bitcoin payment with Lightning on Twitter, and it's like mind blown. I feel like we can have many such moments if we are able to truly bring smart contracts to Bitcoin and are able to put Bitcoin to use, right? So that's kind of like the background context of like what we generally want to talk about. And let me pause there and see what comments other people have. Philip, you want to describe like how you're building the stablecoin where you can earn a Bitcoin yield from the collateral?
Yeah, definitely. Sorry, I couldn't find the unmute button. But to your question, definitely. So what we're doing with Arkadiko is so Stacks is your asset, is your collateral to use in Arkadiko. You put that in an Arkadiko vault, and you can simply mint an amount of stable coins against your collateral. But the beauty of our stable coin is that it's yield generating. And Muneeb, as you talked a bit about Bitcoin, we generate your yield in Bitcoin. In other words, you are borrowing against your own assets, but your yield automatically pays off your loan. And so the Bitcoin is a productive asset in that sense. That's one of the beauties. I guess we'll talk about wrapped Bitcoin in a bit, but we have amazing use case for that coming up with Arkadiko as well. But so Stacks as collateral is just one use case that outputs Bitcoin in the form of a yield that can pay off your loan. So yeah, we're really excited about that one. As I said, we're launching that pretty soon in the security audit right now, and I see some of our contributors even in the call here. So shout out to everyone who's been helping get Arkadiko launched.
Yeah,
awesome.
Yeah, I'm a big fan of what Arkadiko is doing. I think just the fact that Stacks is bringing a productivity layer to Bitcoin, I think, is just very interesting because traditionally we're used to hodling, and now there's a range of applications that are coming out, which I've been really excited about. I think what Arkadiko is doing is actually really interesting. It's sort of it's a step up from like the traditional DeFi loans that we've seen. So traditional DeFi loans, you just take out the loan, you pay interest. You do have to, manage the collateral requirement. But I think the fact that the Stacks chain lets you also pay off the loan over time is really, really fascinating. So I think, you've just done a really great job with, figuring out something innovative that isn't really possible on other chains.
Thank you so much. I feel like this mostly comes from just trying to focus on Bitcoin as a money layer and enabling the use cases around Bitcoin, because I feel like we stumbled upon a design where the smart contract layer. Let me actually go back a little bit. I feel like in the crypto industry, like people are debated like if an asset is money or store of value versus if it's like gas for smart contract. And interestingly, like I don't think there are clear lines. I think there are like blurry lines, because what happens with a gas for smart contracts asset like Ethereum, that at some point, because it's the native crypto asset within that ecosystem, it will start getting used as some form of money, right? Like people are putting up ETH collateral to mint a stable coin, or they are using Ethereum to purchase NFTs and things like that, right? So even though Bitcoin is clearly, like at least in my view, like a better designed money layer, like how it focuses on decentralization and you know, like the proof of work arguments and so on, but also like it's the thing that's gaining real world traction. Like you could literally, at least in El Salvador, like walk into a McDonald's or a Starbucks and literally pay in Bitcoin through Lightning and just buy a cup of coffee. Like that's amazing, right? Like that's huge progress towards being a money layer. But where the line I think starts to get blurry a little bit is you have a asset that's like a gas asset, and because it's the only kind of like primary native asset available, people start using it in the quote unquote like metaverse type applications, right? Because it's like digital only applications, like let's say you're trading NFTs or something, you're obviously going to use the native asset as the primary thing, and that's the use case that we're seeing. So the thing that we wanted to do with Stacks was almost have like a cleaner separation between the money layer and the smart contract layer. So we treat Bitcoin as money, and Bitcoin and Stacks is never kind of like trying to be money, right? Like Stacks is purely like gas for smart contracts. And what we want to enable for people is use Bitcoin as the money layer. Like Stacks is not intended as money, like it is intended as a gas for smart contracts. But what we stumbled upon while trying to create this at a technical level was this very interesting kind of like almost like relationship between the money layer and the smart contract layer, where if you where Stacks became a Bitcoin yielding asset, right? So in some sense, like Stacks has value because you can earn Bitcoin, right? Or because of the potential use on the network where you can use it as gas, right? Which is very different from the typical L1s that you see in the market, right? Because those L1s are trying to create almost like independent systems, and effectively there is no money layer that they have, right? So they end up being a substitute for the money layer, even though they might have been designed as gas. And then that's, I think, where some of the competitive arguments kick in, because then people, because as an industry, it feels like these other L1s like Ethereum and others, they might be coming for the market that Bitcoin is going after as well, because they are also trying to be money, right? And I feel like as an industry, the sooner we can almost like agree on what the money there is, and obviously in my mind, I'm biased here, been a Bitcoiner since the beginning. In my mind, that's Bitcoin, right? So the sooner we can agree that Bitcoin is the money there and just focus our energies on expanding the Bitcoin economy and actually coming up with really interesting use cases of the money there, like the more progress we can make as an industry. But I feel like due to various reasons and for various limitations around the Bitcoin design, we've never seen like smart contracts like basically blossom around the base layer of Bitcoin, right? So that's the key thing that we want to enable. And then once you could do that, and I think we're somewhat at the early stage of that. The Stacks mainnet went live like 6-7 months ago, and people like the Arkadiko team, they haven't launched yet, right? So people haven't experienced what it feels like to actually have smart contracts around Bitcoin, to actually be able to use Bitcoin as a productive asset. And I wanna maybe ask Mason to give an overview of like this xBTC part, right? Like I think that would be very helpful in this discussion as well.
Yeah. So the way xBTC works is it's very similar to Wrapped Bitcoin on ETH. In this case, the xBTC is going to be issued and redeemed directly off the Stacks blockchain. But when someone comes in, they send in some Bitcoin into the service. That Bitcoin is custodied with Anchorage. Let's say they sent in 1 Bitcoin. The service creates 1 xBTC and sends it to that user. That user can at any time bring back that 1 xBTC and redeem it for Bitcoin. So that's basically the way the service works. It's basically a bridge layer between Bitcoin and Stacks. But in this case, we're solely focusing on xBTC first. Once we launch it, what do we do from there? Right now we're sort of talking and partnering with all of the applications that are building on top of Stacks to see where there's a use case for xBTC. So one example is with StackSwap, which is going to be a DEX on top of Stacks. So we'll be working with them to get xBTC integrated there, and so people can purchase xBTC from there. And with Arkadiko as well, we'll be sort of announcing some of the work that we're doing with them as well. But Philip, I'm not sure how we're thinking about xBTC within the context of your system, but if you have a vision for the use case there, I'll let you sort of talk a little bit more about what that could look like.
Yeah, sure, definitely. So Arkadiko, I'll repeat real quick, we are a stable coin where you post collateral and borrow against your collateral. So if you're familiar with Baker and DAI, it's a very similar system. You deposit your Stacks tokens or xBTC or something similar, any Sept token, ERC20 equivalent on Stacks. So any Sept token could potentially be a collateral in the future. Now, we will be launching with Stacks STX, but probably also with xBTC, depending on the availability on mainnet when we launch. So a user who, say, has 1 Bitcoin deposited into xBTC can then collateralize that in an Arkadiko vault and borrow USDA, our stablecoin, against that. So that's one use case. You literally make your Bitcoin a productive asset by borrowing against that in a DeFi way, in our DeFi protocol. There's a few other use cases, but I think this is the one that I'm most excited about when we launch, and the one that's ready, really. So I've been working with some of the TokenSoft people as well. I think Will, he has been instrumental in helping us, the Arkadiko team, in getting xBTC ready, for acceptance in terms of collateral. So we are ready technically. We're just going through the security audit. So you technically would be able to borrow against your xBTC holdings from day one once we launch with Arkadiko.
That's so awesome.
That's awesome to hear. And I feel like maybe for some of the listeners, I can give a little bit of an overview of because I feel like there's almost like a spectrum of options and choices available for how you can use Bitcoin in smart contracts. So I think the most kind of like, quote unquote pure form of using it is when your Bitcoin kind of like stays on the Bitcoin main chain. And because the Stacks layer, it can actually react to Bitcoin transactions. Like you can do pretty interesting application where you're just doing a Bitcoin transaction to lend out your Bitcoin, and the collateral is actually in a smart contract on the Stacks layer. And people can verify that if our Bitcoin doesn't come back, it will automatically, the smart contract will release the collateral. So that's like one category where you're keeping your Bitcoin on the main chain, right? And then obviously like that's a design space, and you can do interesting things there. For example, like things like native swaps, where you want to buy or swap into like other types of assets, but by doing a pure Bitcoin transaction. And then your design space actually opens up more if you're able to somehow get Bitcoin inside a fully expressive smart contract. Right? And that's like the holy grail. Like how do you really do that? And I think again, like as I said, that's a spectrum. like the most obvious way of doing it is like, hey, just have a wrapped Bitcoin type of a asset, and just issue that, and because it's tied to Bitcoin and there's a custodial service behind it, people can be fairly comfortable using it. So that's the area where TokenSoft and Anchorage and xBTC are coming. Right? So that's like the simplest, fastest, most practical way to actually do it. There is one interesting difference between xBTC on Stacks, which is custodial, versus wrapped BTC on Ethereum, which is also custodial through BitGo. And the difference is that the Stacks chain actually, if there's a Bitcoin fork, like Stacks automatically forks with Bitcoin. And the transactions of xBTC are ultimately getting hashed on Bitcoin, and the entire history of Stacks is basically hashed on Bitcoin, right? So in some ways, your xBTC, which is a derived asset and obviously custodial, the movements of the asset itself is still benefiting from the security of Bitcoin. And I think we can double click on like how exactly it is benefiting and so on. Like that's a separate technical discussion, but it is, those hashes are on Bitcoin. All the history is on Bitcoin, which is something you don't get. And the second point is that if Bitcoin forks, Stacks basically automatically forks with it. So in some ways, there are some benefits of even having a custodial wrapped asset on the Stacks there versus having it on a completely independent system that has nothing to do with Bitcoin. But then if you start moving into what I call the middle of the spectrum, where you're not going through a custodial service, but you actually want to put up collateral and issue the Bitcoin pegged asset against the collateral. And in this case, like some people would find it like more quote unquote trustless, like not fully trustless, but somewhere in the middle. And over there, you're kind of like basically taking a price risk, right? So what if your collateral, there are market fluctuations and your collateral is no longer good. The interesting thing again here, which is more unique, is that if your collateral is in Stacks itself is a Bitcoin yielding asset. So just like with Arkadiko, you're minting almost like a stable coin, but you're actually earning Bitcoin on your collateral. You could potentially do something like that with a Bitcoin pegged asset as well, which is I think a very interesting design space, right? Like people can do interesting things with these primitives that your collateral is earning Bitcoin, and that collateral is actually used to mint an asset that actually represents a derived Bitcoin asset. It's like TBTC, like something like TBTC, but with the Bitcoin yield with the collateral. And again, it shares the same properties that any movements of this asset would be recorded on the Bitcoin chain through hashes, and the Stacks history is linked that way, and so on. So you get like certain security benefits. And then on the extreme end of the spectrum is the holy grail of like actually having fully trustless like pegs in and peg outs. I feel like no one has really been able to do that in the Bitcoin ecosystem. People usually end up having like some sort of federated system, like a multi-sig that is in the hands of some parties. But it's an open R&D question, right? And we are poking around, and there are certain leads that we are pretty kind of like excited about, that you can at some point have a more like quote unquote trustless way of like putting Bitcoin in and then taking Bitcoin out. Putting Bitcoin in is the easy part. You can lock it and kind of like release it over there. But taking it out is the hard part, the reverse of the peg, right? But at some point, I think it will be possible, especially if there's more support from Bitcoin core developers. Like for example, there could be some Bitcoin improvement proposals like BIPs, where let's say Merkle-proof checking, for example, gets implemented natively on the Bitcoin side. As soon as you have that, you could actually start implementing much more complex things because you have Merkle-proof checking on the Bitcoin side. I don't want to go too much into it, but the takeaway message over here is that there's a spectrum of choices for developers, and different choices have different trade-offs, right? Like for example, with the custodial approach, you could actually like suddenly, let's say, $100 million worth of Bitcoin needs to be issued. Like they can scale up pretty quickly, right? Like it's not whereas with the collateral approach, you would have trouble like getting enough collateral to be able to mint kind of like this Bitcoin derived asset like that quickly, right? So all these approaches have their own kind of like pros and cons. But what I love, like from where I'm sitting, is that all these options become available to developers who want to expand the Bitcoin economy. And I think that's the thing that excites me the most, that I'm not here to like pick like which one is better or not. All of them have their trade-offs and they fit certain use cases more than the others, or they fit certain user profiles more than the other. But just the idea of enabling all of them and giving like a very diverse tool set to developers so that they can come in and actually expand the Bitcoin economy. That is the thing that excites me the most.
I'd like to elaborate a bit on that, in fact, because specifically in the Stacks ecosystem, there have been a ton of new developers, coming online in the past few weeks. And one project, not chilling in here, but one project that I'm really excited about is something that received a grant recently by a developer named Pseudo Zach. And what he did is he built a Stacks Lightning Network bridge, meaning that if you have an outstanding Lightning invoice, you could pay that with any, whether that's a Stacks token or any Sept token. So in the future, you might use your Arkadiko stablecoin to pay your Lightning invoices, for example. That's one of the few examples that I'm really excited about, where you see this clear intersection between Bitcoin development and Stacks development. And so while this is still a proof of concept, it works today, you can use it. But I definitely, when we focus more on spreading USD, I definitely see more usage of it, paying Lightning invoices, paying other stuff, integration with mobile apps, things like that. So definitely exciting times there.
I was not aware of this, and this sounds amazing. Like I would love to learn more details. But by the way, we have Patrick here as well. Hey Pat, how's it going?
Hey, how's it going? I'm good.
I know you're maybe you've been working too hard over the past weeks. Like I want to congratulate you on the city of Miami officially accepting the treasury of Miami coin.
Oh yeah, thanks for sure. It's awesome because we now have like a third way of voting. Instead of voting with our ballot or with our feet, we can vote with our coins in a way. And I think this is the beginning of something pretty big. I think it's here to stay. I don't think this is like a flash in the pan. So I'm excited about that.
Yeah, I think I was commenting. I forget where this was, but I was basically really like inspired even by the mining only community driven launch. Like I feel like the energy that you get when something is like truly community driven and truly kind of like mining only, everyone is at the same level, anyone can participate. It's like in some ways like Satoshi did that, and then the industry like went off in a different direction. And with I feel like after that, like probably Miami Coin is like one of the first big projects where we went back to just this mining only, completely fair, completely neutral type of a launch, and that was like so amazing to see.
We have a question coming in. Oh, go ahead. We have a question coming in from Chris Johnston. Go ahead.
I'm actually just down here in Miami, and yeah, we're really excited to just be a part of this movement, and all our arenas are being named after crypto exchanges, and it's a lot of fun. We have a hackathon coming up at a FIU, and obviously, I think if the winner could come up with something even mildly awesome on on the Stacks, CityCoin, Miami Coin ecosystem, expand that Bitcoin economy, I think it has a really good chance of winning. And I'm just wondering, like, what are those sweet spot areas? Like, where do you see? I could definitely see voting, like voting with your dollar, like buying it. But what are some of those? What are some of those DAOs that someone should build that?
Yeah, totally. Can you hear me okay?
Yes.
Yeah. Okay, great. Thanks. Yeah, so there's probably like 5 projects that are currently building on Miami Coin right now that I know of. There's probably a handful of others. The Miami Coin community is participating in Shell Hacks, and they're also participating in Miami Coin Makers Month. And some of the projects that I've seen so far, this is one project called Miami Voice. And essentially what it is like a voting app where you could use your coins to, I don't know if you have to stake them or spend them or whatever, we'll find out, but use your coins to vote on specific civic agenda items. Like, one item might be, subsidized Wi-Fi in underprivileged homes, or put out bounties for recruiting new crypto startups, or like name your civic agenda item. Essentially, what you can do is put them up to vote, and then vote on it. And of course, you need the government's buy-in. And I think it's possible to get that. I think like Miami Gov was, sort of innovative enough to say, we're actually going to do this. This is good for our city. They might also be willing to, with Miami Coin, they might also be willing to say, 5% of what we earn as the city. So far, we've earned like $7 million, the city of Miami. 5% of that ongoingly, we're just going to put up for a vote. And maybe folks who hold coins only can vote, or folks who can hold coins who are KYC'd as Miami citizens can vote. But I think there'll be something there. There's also there's a couple more apps. Like one app is a proof of HODL access control to physical spaces like Airbnb and stuff. So if you hold like 100 Miami coin, $4 or something. If you hold 100 Miami coin, you can like access a WeWork. It's like a Miami coin WeWork, or access Wi-Fi or something. But there's a bunch of other ideas people are working on too.
That's awesome. That's awesome. So you'll be there Friday?
I won't be, unfortunately, but
okay. Well, there'll be Miami Coin people there. Is anyone else going to be there in South Florida?
Yeah, Jason Schrader from Freehold, who's a core developer on the Miami Coin protocol, is going to be doing a session on Saturday for developers.
Excellent.
Great, thanks, Chris. Any other questions? Just raise your hand and we'll bring you up on stage.
Patrick, I actually have a question. Is there some kind of playbook coming up to scale this to multiple cities beyond Miami, or what's next?
Yeah, so the city's kind of, sorry for the car alarm in the background. The city is kind of deciding that right now. So I think first base was like getting Miami on board. Third base, skipping second base, third base would be like, there's 200 qualified cities, and they can turn their city coin on at any point in time. There's no one from the community is making a decision on which is next. They're just saying this group of cities can do this. And I think we're somewhere between first and third base. Like second base is more like, second base is kind of where we're headed, which is like, the community seems to like Austin, Texas. The community seems to like Seoul, Korea. And I think it'd be good for us all to just like point in one direction and just conquer the next city, and do that a couple times before opening up the entire playbook. But there is a playbook being created by the community, and it's just not. It's going to have all the information to act. It's going to have all the information except for the actual mechanism to activate new cities.
I love this approach, Patrick, and for whatever it's worth, I feel like the Stacks network is also scaling up, and I feel like if you launch like 200 cities over there before things like subnet are live, like it's gonna be a pretty interesting challenge for folks. All right, should we do more questions?
We had a few drop offs, so we can continue with the conversation right now.
I wonder, what are some of the other use cases for xBTC?
from the Stacks Foundation.
Yeah, so we're targeting we're going around and speaking to all of the DeFi applications that are building on Stacks, and I think the first thing that we'll see is sort of like the traditional DeFi tool set, for lack of a better term. So we'll see it as a trade pair in AMMs. So you'll be able to trade against xBTC and in AMMs built on Stacks. With Arkadiko, you're seeing lending, and that's always one of the primary tool sets. And I think the next steps are we'll start to see perhaps derivatives, things like options on xBTC on Stacks and things like that. So you'll basically see those sort of major DeFi primitives probably migrate to Stacks first, and we'll go and speak with all the projects that are building those on Stacks to see if we can help support them in any way. And basically what we like to do is to see if we can do sort of yield farming programs on these different apps to help bring more liquidity into Stacks. That's sort of like where our operations are usually targeted at. So yeah, if you're building on any projects on Stacks or anything that's new and innovative, and you see as an xBTC is an asset that can help grow your network and is something that you need on your platform, we'd love to help. So always feel free to reach out on Twitter at Raptify, or just DM me directly, and we'll see how we can help.
Hi, Brittany. Welcome to the stage.
Hey, yeah, getting the hang of this Twitter Spaces. Yeah, I just was going to ask, we've heard a lot from, we get some Bitcoin maxis who are excited about Stacks, but with Wrapped BTC, there's a number of people who are sitting on Bitcoin. They don't want to sell. They want to get involved with putting it on the network. So I'm just curious, like, where you think, or the members of this panel, where you think those people can get involved first, and where they should be excited, because I get that question a lot from folks who maybe are part of Stacks Network or haven't jumped in yet. Either they've earned BTC through stacking, or they have Bitcoin in their existing wallet and they want it to be doing more than just sitting there. So just wanted to hear like sort of the ideas that are already out there or that are coming, people can use.
Yeah, I feel like the biggest, I would say, gap that exists right now is obviously the Stacks ecosystem is still relatively early. The minute launched was like 6-7 months ago, and there are two things here. One is we want all these different types of Bitcoin assets represented on the Stack side, right? So xBTC is going to be the first one. And then there might be some others that offer different type of trade-offs, right? Honestly, I actually think that the custodial one is actually pretty practical approach, and it's going to cover like a lot of use cases. But then there are definitely people who, let's say, don't want to go through a custodial, right? And there needs to be like that design space needs to be covered by some options. But the reality is, right now there is literally no Bitcoin derived asset or wrapped asset that exists on the chain right now. So I think we're still very relatively early. And the second track of it is basically enabling people to do interesting things directly on the Bitcoin chain. Right? So if you could swap to an asset, we saw the native swaps, but again, they're early stage, and there's a bunch of tooling and infrastructure, and UX needs to be built around it for it to become like very easy for people to use. And other things like, maybe we've seen a bunch of NFT launches, like libraries that enable Bitcoiners to just participate in an NFT launch just by doing Bitcoin transactions, or maybe even trade or move around NFTs by just doing Bitcoin transactions. I think that'd be pretty cool. So because of the layered approach, I think there's always going to be these layers where there's the Bitcoin main chain, and there are certain Bitcoin transactions you can do to participate in these new types of use cases. But then there are going to be Bitcoin derived assets on the Stack side. And then that unlocks like a new type of functionality, which you probably can't do on the main chain. I think the main chain functionality is always going to be a subset and more limited. but you're going to get like fully expressive, like whatever you want to do, like you're just limited by your imagination, and that type of stuff is going to happen more on the stack side.
Is it, Muneeb, one thing you keep highlighting is sort of like the decentralized versus centralized approach. And if it's helpful, I can sort of do a deep dive on the different styles of bridges and sort of the spectrum.
Yeah, that'd be very helpful.
Yeah, so there's two ways to move assets off chain in this sort of spectrum, and basically the term that everyone uses is just a bridge. You know, how do you get your asset from one blockchain to another? Well, you use a bridge. And there's decentralized approaches which are trustless, and that means that the transfers are just cryptographically managed, and it's more automated. And the issue that we see on that side, so I think long term that's where everything's going to end up, and then on the centralized side, that's sort of how we're doing it, where the asset's being custodied with a custodian, and then when the asset lands, now a token is minted on the other side. And there's a couple things to sort of think about, and one is just trustlessness. So obviously there's a decentralized approach with a fully trustless system, and then there's a centralized approach. And what we see most of the bridge implementations looking at like right now is somewhere in the middle, where, like Muneeb mentioned, it's multi-sig wallets. And I think from my perspective, you should either be on one side or the other, because the multi-sig wallet approach, or sort of the federated approach, is still, I think, a little centralized. But what you get with the centralized system is just faster. You get a faster transfer time, and you have simplicity. So the custody solution, what kind of tech do you need to build up? Well, it literally sits in the wallet. And so that's technology that's been tested and proven. We use Anchorage, which is one of the more sophisticated custodians in the space. So there's good cybersecurity controls, but the core technology is very simple. You just need a wallet. And then when you're looking at the trustless systems, those are still yet to be sort of like figured out. I think there's going to be a few more years of R&D before those are where they need to be. What we're seeing right now in the bridges, and we're big fans of them, we use them, but the decentralized ones, the time to move back and forth between blockchains is still relatively long. So in a good case, you might see an hour, but you might see anything from 4 hours to 6 hours. And that technology is going to get better over time, but you sort of lose speed with the trustless bridges today. And again, long term, I think everything's going to end up there, but the technology has a long way to go. So from our perspective, we're like, what's the fastest way to get wrapped assets like xBTC on stacks? And that's going to be with a custodied solution, just like wrapped Bitcoin on Ethereum. And so we've launched that, and yeah, we're just excited to work with all the projects that are launching on stacks to see how we can help them out. But that's sort of the spectrum that exists and the trade-offs that you'll see on either side.
Mason, what makes this project different than some of the other projects that you've worked on other blockchains?
Do you mean in terms of Bitcoin specifically, or from what angle?
I think I'm just curious, why is, is there any differences from the stacks perspective than working with, say, the Ethereum blockchain? I know that on your website, there was a few different projects you worked on. I'm just wondering if they all follow the same processes, or if there's something unique about xBTC.
Yeah, so we did have to develop these smart contracts for xBTC. So it has its own unique language. And so we went ahead and did some training internally and developed the contracts and got those audited. And then I think, what it is really for me is just the fact that it's built on top of Bitcoin. I think that's probably what's the most exciting to us in our team, is that we're going to be able to enable new use cases. And it's with Bitcoin, and it's on top of the, it's pegged into the Bitcoin blockchain as well. And so I think that's probably what's exciting from, in terms of building on stacks for us. But yeah, what's different is I think the smart contract language is definitely unique, and we enjoyed developing on it. And yeah, just the fact that there's more Bitcoin involved, I think, is just exciting me. I'm just really excited to be able to take out loans on Arkadiko and have them pay off themselves. I think that's the one use case that I've been waiting for a while. Is just a trustless way of doing that.
Mason, I've got another cool one for you. So as soon as we accept the xBTC as collateral, what you could do is borrow USDAs or stablecoin against it, obviously, but then use your stablecoins to buy Stacks tokens and stack those Stacks tokens. So indirectly, you're then earning a yield in Bitcoin on your Bitcoin. In fact, this is one of the things that I want to abstract away for users. It's some kind of simple button at some point where you see your xBTC with a button next to some wallet saying earn yield, whatever it is, 4 or 5%, decentralized, but with a fixed term. And underneath it buys your Stacks token, stacks them for you, and returns you xBTC and your wallet on top of your current xBTC.
That's amazing.
I love these primitives being built, right? Like these are kind of like the DeFi Lego blocks, and then people can rearrange them and use them in new ways that the early team members would have never thought.
Now, Philip, if you can help me take out a loan on my Bitcoin, buy a house, and then earn Bitcoin on that somehow, I think now we have a really killer product.
I'll look into it. Sounds like an amazing use case.
Great. Any other questions from the community? Got a lot of great listeners tonight.
Yeah, typically we have a ton of questions. Brittany, how was that answer for you? Whoops, she dropped off. All right, Muneeb, any last words?
No, I think I'm just super excited about all these different things going on. Obviously, like we're seeing like these different projects. It might be like independent developers or open source projects versus all the way to like startups or even bigger companies that are trying to build things. So my mind these days is actually more on the scalability side. I've been working on subnets. I think I mentioned that a little bit earlier as well. So the way to think about this is like the Stacks chain focuses more on decentralization, and so it's not a system that basically says like, hey, it's a data center chain, and you get really fast transactions or really kind of like cheap fees and scalability because you're just compromising on decentralization, right? Like I don't think a lot of people in the industry really understand that it's a decentralization scalability trade-off. Right? So anyone who's basically saying that, hey, we have a ton of scalability is implicitly making a decentralization trade-off, but really not telling you, right? So what we want to do is we want to have the Stacks main chain, and obviously there are a ton of like improvements that can be made just on the main chain. Like they easily get like a 10x, 20x more network capacity by like various things like cost functions or other things. But then long term, I almost want to make this design choices like very explicit to people that if you want more decentralization and security, like you kind of like keep your assets on the main chain. But if you're willing to kind of like give up on decentralization a little bit and get massive gains on the scalability side, you can go to a subnet. Right? And I think it's a great problem to have. That I think we have so many amazing teams building in the ecosystem that the sense of urgency for some of these things going live has actually gone up a lot in my mind. So I've been trying to spend most of my time on effectively like long-term sustainable scalability solutions, and complemented with in the short term, like how do you get the maximum throughput out of a decentralized smart contract layer? So I think those are the two things that are on my mind, which are different from kind of like the topic at hand, but I'm just sharing what I'm spending most of my time on.
Yeah, well said, Muneeb. I think a lot of it has to do with the narrative, and I really love what you said about Bitcoin. You know, like there's some trade-offs involved, and I know for me early on, listening to you in clubhouses, I was always the person in the audience asking the question about when is innovation going to take place on Bitcoin, and I really feel with xBTC and everything going on in the accelerator, that time is now, and I'm super excited about xBTC. Thank you, Mason, for joining us today. Do you have any last thoughts?
No, we're just super excited to see this launch and work with the community and see what other use cases we can create. So if you're working on anything cool, always feel free to reach out. And if there's anything you're not seeing you'd like to see, let us know and we'll make it happen.
Mason, maybe we'll buy your pudgy penguins with xBTC on the stack side.
I would like to take out a loan on my pudgy penguins, but a loan on xBTC. I think that's a killer use case.
Might have time for just one more question to squeeze in, if that's okay. Vidak, do you have a question?
Yes, thank you. I was just trying to figure out how this whole integration is working. So I just wanted to understand if once the network starts growing and you see more traffic on the Stacks network, would that also consume a block space on Bitcoin network?
Yeah, it's a great question, right? So the way the Stacks network is designed is the traffic on Bitcoin is a function of active miners, but not a function of the transactions on the stack side. Right? So let's say, for example, there are 10 miners and 1,000 transactions, and transactions go from 1,000 to 2,000. Bitcoin network is not going to see that. But if the number of miners go from like 10 to 100, the Bitcoin network will start seeing like 100 transactions per block per miner, right? So it's a big O of number of miners, but there's a natural equilibrium for miners because the miners are effectively bidding on. There's a bunch of money kind of like coming on the table in STX every block. These are the gas fees plus the Coinbase rewards. So there's almost like a bandwidth of like how much money is available and how many miners can effectively like bid on. Right? So that way, like I'm less worried about scalability limitations on the Bitcoin side. If anything, these miners, if you look at like what they do on Bitcoin, they very aggressively do replace by fee, like RBF, right? And they're willing to pay insanely high fees just because like the amount of money they could make on through mining is so much that the fees are like, they are fine with paying really high Bitcoin fees. And they're aggressively doing RBF to actually get their blocks. So they stand to lose a lot if somehow their block their transaction doesn't get into their block, which is a very interesting model that the Stacks transactions, like the Stacks mining, doesn't consume any electricity. Right? So you could actually scale out transactions in a more quote unquote energy efficient way on the stack side and give a more sustainable revenue stream to Bitcoin miners because now they have a new type of party that is other than the Coinbase rewards, like people who are willing to pay very high transaction fees and they're willing to pay them over a very, very long term as well, right? So it fits in the model of Bitcoin as a settlement there. And because a single Bitcoin transaction can mean a lot more than just a transaction, right? Like in our case, like it's actually hashing an entire block. So this way, in terms of like making it incentive compatible with long-term Bitcoin mining, I think it's a very interesting piece that has been missing so far. Like people like these new types of parties that are basically willing to pay really high Bitcoin fees.
So if I understand, so that means it creates a secondary revenue stream for Bitcoin miners to participate in the stack verification process and stacks or
Yeah, so you don't have to be, you don't have to be a Bitcoin miner, right? So let's say you're a Bitcoin miner who doesn't care about stacks, you will still see higher transaction fees, and you will be more interested in just mining Bitcoin blocks. But stacks mining is like some Bitcoin miners might decide, and actually there are some that do both. And so the way to think about this is like, Bitcoin doesn't need to be aware of the stack layer. But if somebody wants to mine stacks, like anything that happens on stacks is aware of Bitcoin, but Bitcoin doesn't need to be aware of stacks, right? So if somebody wants to mine stacks, then they need to explicitly follow the protocol, the stacks protocol, and send those mining transactions on Bitcoin, if that makes sense.
Thank you.
All right, awesome. Thanks everyone. This is great as usual.
All right, friends, that's it for today. Join us next week, same day and time for the Crypto Internet Show. Thanks, everybody.
Take care.